Hey, Naperville, what is the market doing? Is it going to cool down anytime soon? That's the big question on every buyer's mind. I'm having a lot of conversations. And so today we're going to focus on that. And what does that mean for your power, your leverage in negotiation? All that and more up next on the Naperville Real Estate Weekly Market Update. Owning a home in Naperville is about living a great life today and investing in a secure tomorrow. On this show, we're going to give you the tools to do both. Welcome to the Naperville Real Estate Weekly Market Update. Hey, welcome back to the show. I'm Chris Grano from Keller Williams. This is Todd Gosden from Compass Mortgage. We are your hosts for the Naperville Real Estate Weekly Market Update. Todd, how you doing?
I am doing great. Thank you very, very much for asking. Very good day. It's beautiful outside.
Oh, man, I'm loving it. So we're going to talk, it's the halfway point essentially through the year, just about, right? And really in real estate world, it is the halfway point because pretty much, end of November, mid-November, anything that goes under contract at that point is going to close towards the end of the year. So I thought it was a good time to kind of go back a little bit and reflect. And we've talked about this in the past. Obviously, this podcast is specific to the Naperville market. But Todd, you and I, of course, work with homeowners, home buyers, and sellers across Chicagoland. So I'm going to widen out just a little bit today and talk about what the market, what inventory is doing in the surrounding suburbs as well. Is that okay with you?
Totally. Absolutely. Go right ahead.
And so we also, I've been having a lot of conversations, as I mentioned, and I know you are as well, with buyers asking the same question: what's the market going to do? And, neither you nor I have a crystal ball, but we're trying to go with what the data is showing us. And you had some data you presented to us last week that is encouraging for buyers. Sounds like things are hopefully going to cool off a little bit. And when we say cool off, we just mean in the number of competitors out there, competing buyers.
Sure.
But that could also mean pricing. And so we're just going to touch on that again and give some real data and also talk about how that influences our negotiations.
Okay, great.
So what we're going to do is we're going to look at the numbers here in Naperville. I'm not going to dive into the price brackets. What I'll tell you is that we had 131 new listings this week, which was down just a smidge, about 7% from last week. 104 under contract, which is also down just a little bit, and 101 closed. So very comparable, overall very comparable to where we've been. So now what I want to do on this issue of inventory is take a step back. So I had a conversation, I was telling you, Todd, offline with a home buyer moving in from out of town. And they're looking at a couple different areas. They're looking at Naperville. As many homeowners in our area, sometimes home buyers are looking at 2 or 3 different suburbs. And they want to know, what can my money get me here versus here? What is life like living in Plainfield versus living in Naperville? So just looking at inventory right now on all the price brackets. So, $100,000 condos versus, $1.5 million homes.
Sure.
Naperville's inventory is 1.9 months supply. Compare that to 3 years ago is what we're going to do. 50% down. So we're still 50% down from 3 years ago. Then we look at the neighboring suburbs. Okay, Wheaton, 2.1 month supply inventory, not much better. Also down 50%. We look at Aurora. Aurora has 1.2 month supply of inventory. So just hardly anything there. And remember, for the folks listening, Todd knows this, month supply of inventory I find is a better way of gauging inventory because we could talk about the raw number of homes for sale, but the raw number of homes for sale does not take into account how aggressive buyers are, how many buyers there are. So this is really a more balanced way of looking at it, right? So let's look at the heavy hitters here. We look at 3 specific towns. Plainfield, okay, a lot of folks comparing Plainfield and Naperville depending on the price point and both school, great school districts and things like that. Plainfield, 1.2 month supply of inventory, down 61% from 3 years ago. So there are, it's unbelievable. And then we look at 2 other areas, Bolingbrook and Romeoville, both right at 1 month supply of inventory and both down about 60% from 3 years ago. So the question is, are things going to change anytime soon? They could, but you're starting from a pretty low place when it comes, of inventory. So if they're going to bounce back, it's going to take them a while to get back into more of a neutral market. Any thoughts on that, Todd?
Well, oh my gosh, there is so much to talk about here and unravel. First of all, we're dealing with something that has not been seen, at least in several generations, of a pandemic. All right, so
Right.
Comparing right now, we're comparing apples and oranges. That's what we're really doing. Is we ran out of inventory, yes, but people did not want to sell that home until they had sold their home. They want to sell their home to be able to go buy a home. That has not always been the case in the past. People did it with confidence. We had lack of confidence for the last 14 or 15 months. And okay, well, are we coming out of this? Or are we not coming out of it? What's going to happen to the housing market? Interest rates were at record lows. We've had a millennial generation streaming into this, gobbling up properties. 58% of millennials were first-time home buyers last year that dominated the purchase market. They had nothing to sell for the most part. These are first-time home buyers. So there are so many factors that go into what we are going through and where this is going to grow to be in the near future, that things are softening just a bit. And softening is not bad. Softening is healthy for the environment. Most economists are predicting we're going to get back to a 3.2% growth rate starting next year. We are heading in that direction, but we're also building confidence in the soon-to-be buyers and sellers in the real estate market all over the place. And the other thing is that we're discounting is that what was that 2008 through 2012 era, when you start talking about communities like Plainfield and Oswego and some of them, it took 9 or 10 years to recover many of those homes just to get back into the positive so they could sell them.
That's right.
So there's just no comparison to this versus 4 years ago versus 10 or 12 years ago. They're totally separate environments. And I think the other good thing that we all should buy a lot of stock in right now with what's happening with the softness of this market is that there's only a bubble to burst when there's a bubble, right? And right now we're seeing everything being gobbled up. People are buying this stuff not on the horrific lending and the banking that was a long time ago. We have standards in appraisals now. So the market is moving by what people are willing to pay for it.
Right.
And if they're willing to pay for that today, it doesn't mean there's a bubble. It just means that maybe this was something that had to happen, right? So there's never has to be a rhyme or reason, but I think the health of our market moving forward is going to be really good. I really, really believe so. And I think we're going to see it a little bit higher rate, a little bit softer, inventory starting to build. I think some positive things are really going to start coming out of this.
Yeah, and when I talk about these inventory numbers, I don't say it to scare folks. I say it to just give folks a snapshot of reality of where we're at.
Absolutely. You have to.
And because it's all about information. All right. And so we'll jump into that in just a second. What I want to do back up real quick though, and mention, you talked about the health of the market going forward, millennials being first-time home buyers. I'm seeing the same things you are. I see way more young home buyers now putting more money down, being in a better financial position. And it's really encouraging, not only for the housing market, but just, for the future of our country, our economy. And so I'm excited to see people, I think, learning from the mistakes of past generations and really doing things in a different, more fiscally responsible way. So that's very exciting, I think. And then, so let's talk about that. Then we have to have this knowledge, right? I think you and I know that knowledge is power. Of course, that's the old adage. But when it comes to negotiating, they always say, he who asks the most questions wins, right? And what I want to get across today to our viewers and our listeners is that when we're in this scenario, we have to remember how leverage works. So unfortunately, for most buyers, the leverage is going to be heavily in the seller's favor. So what are some of the things that we can do to gain back some leverage? Well, it's just what we're talking about. Have solid financing. So if you want to have some leverage over a seller to be able to influence the price, maybe influence some terms, maybe influence a closing date, you've got to have things in order. So I just had a conversation with a buyer the other day. If you have the opportunity to put 10% down, do that, versus I know maybe you want to put 3% down and stick some money in your pocket, but is that going to cause you to lose the house? Right. So, totally. And just understanding that there's a very fine line between all these things. And I'll jump on the other side to talk about sellers. I think sellers for the past 3, 4, 5 months now have been conditioned to think I can ask whatever I want for my house and people are going to pay it. And I'll tell you what, that's not the case.
Right.
I'm seeing that on the buying side and on the listing side. I've had some sellers that want to push the pricing, and if there's ever been a time to do it, now is the time to do it. So
Yep.
within reason, I'll agree, and then I'll say, okay, but we've got to be realistic here. And if the market speaks to us and the buyers push back on that price, we can't, we have to be willing to respond to that.
Yeah, and I think people need to remember what was 6, 8 weeks ago isn't today.
Right.
The market is fluid. It changes every day, just like a stock. Listen, I wish I would have bought X stock 20 years ago. Well,
Right.
shoulda, woulda, coulda, right?
Right.
The market does change, and we have to be cognizant of the fact that if you're looking to do something today, doesn't mean you're going to get what could even be 6 or 8 weeks ago prices.
That's right.
The market has definitely moved since then.
You're right. And and just the knowledge of these things, obviously that you get sort of a frenzy effect like we had a few weeks back,
Yeah.
like you said, 5, 6, 7, 8 weeks back. And we didn't have that back in January. I mean, January, February, we were still in a low inventory situation. But this, like you said, the fluidity of the market, we weren't getting 50, 60 offers in January, February.
That's right.
And
Right.
and now you're starting to see somewhat of a cool off in that respect too. Part of it is buyers get savvy. And some buyers are saying, okay, whoa, whoa, whoa. But and the good news that I want to share, and I know you're having these conversations with your home buyers as well, is that you can still make great, wise home buying decisions in this kind of a market. You don't have to throw caution to the wind.
No.
You don't have to wind up splattered on the sidewalk going, yay, great, I got the house, but I sacrificed everything else to do it. So the trick is, have those conversations with folks like yourself and myself and be prepared, because I am seeing when home buyers go in unprepared, they're either getting frustrated because they're not winning, or they're winning, but perhaps at too high of a cost.
Exactly. Winning is all in the mind of the beholder.
That's right. That's right. And you have to have that conversation too. What is your goal? Do you want to get in a house, or do you want to get you want to get a deal? And if you want to get a deal, like, I'm talking to investors right now, it's probably not the greatest investor market of all time if you're trying to buy one.
Yeah, right.
So,
Totally not.
you've got to know, you've got to have the knowledge. You can't rush into it. Just like any financial decision, you can't just rush in and say, I want to do this. You've got to ask questions. And like you and I talked about last week, it's our job to ask you the questions and help you understand the situation that you're in. So,
Totally. Yep, I agree with that 100%.
Well, thank you, Todd. I think
Absolutely.
It's going to be really, really interesting to see where we head over the summer. Like I said, at this sort of halfway point throughout the year, I can't wait to look back at the end of this year and see, how great it was for home buyers and sellers.
Couldn't agree more. It's going to be an adventure, just like the last 18 months. So
That's right. Well, I'm glad to be here with you. Thank you all
Me too.
for watching and listening. Check us out on youtube.com/Chris Grano, on Spotify, Apple Podcasts, all those great places. Check the show notes below. Get a hold of me and Todd if you have any questions. And we'll see you all next week on The Update.
see you, buddy.